When he posts that Iran negotiations are going well, the markets are going to fly. Oil's going to drop. Why? Because there's a straight line from getting a deal with Iran to the Strait of Hormuz reopening, to oil prices coming down, to thus easing inflation fears, to the Fed can now cut rates again. And therefore, when the rates are being cut, the economy will start growing without triggering runaway inflation. Now, money is always chasing a return. This is something I think people lose sight of, much to their detriment. And it seeks a return, most especially in late-stage empires like ours that have a $39 trillion deficit and no end in sight for more deficit spending and money printing. Because in that scenario, prices are going to inflate, assets are going to inflate, and you have to put your money somewhere to hide from the negative side of the inflation and take advantage of the assets going up. And if you don't do that, you're going to get poorer every day. So savvy investors are super paranoid and extremely reactive in moments like this because their money's gotta go somewhere. They can't just sit back and wait things out. They have to be proactive. Same thing in reverse when Tehran comes out and rejects the ceasefire. Oil spikes. Inflation fears spike again. Investors panic again about the Fed being unable to cut rates and stimulate our way out of the problem. And because of that, people panic sell, causing the market to crater. Now, hopefully, what you can see now is that none of this is random. Every swing you're watching is the market pricing in the probability that the Fed has either just lost its tool or gotten it back. Recessions often last for over a year, and no one wants to be caught naked investing in the wrong thing when the tide goes out. That's why the Iranian regime knows they don't need to win the military conflict to win the war. They just need to keep the Strait of Hormuz disrupted long enough to send oil prices up for long enough that the US loses the political will to fight.